Hi, friends. Dr. Joe here. I hope you all are doing great and welcome to this video. In this video, we are going to discuss how you can become a consistently profitable trader in Forex. What are the steps you need to follow to make sure by the end of the last step, you have become a consistently profitable trader? So there are 21 steps which you need to understand and follow if you really want to become a successful trader in Forex. So let us look at each and every step one by one. And I have a request. Kindly do not skip any step because every single step is equally important so that you can become a successful Forex trader. First, you need to understand what are the basics of Forex. You need to understand that Forex has $7 trillion worth of business every single day. That means the volumes are very, very huge in Forex. In Forex, you trade in cross currency like Euro USD, GBP JPY, JPY USD, AUD USD, and there are multiple other currencies. There are many currencies, but only few currencies have a lot of liquidity and small spreads. So you need to understand which currency you're going to trade in. A good part about Forex is it is open 24 hours for 5 days, Monday to Friday. So you can trade at your own convenience. You have to find out which trading zone you can trade in. And basis your convenience, you can get into the markets. Second, you need to understand what drives Forex currency pairs. Why does a pair go higher? Why does a pair go lower? Why there is a bull run? Why there is a bear run? You need to understand the fundamental side of Forex. Forex depends upon the economies of a country. So if one country's economy is becoming stronger, the other country's economy is weak, then there will be movement in one side. But if one currency economy is stronger and the other is also equally strong, you will see sideways market. So you need to understand the fundamentals if you want to trade in Forex. You also need to understand where you will find maximum liquidity in Forex. If US dollar is a global currency, then you will find maximum movement in pairs that are linked with a US dollar, like Euro USD, GBP USD, AUD USD, JPY USD, and so on. So you need to understand which pair you're going to trade in and what are the fundamentals that create movement in these pairs. Point number three, if you want to start trading in Forex, you need to understand the basic terms that are used in Forex. What is a pip? What is a spread? What is the ask price? What is the bid price? What is a leverage? What is stop loss? What is take profit? What is a trailing stop loss? Now, I have created a series of videos where I have discussed all these terms and concepts. The link is given in the description. So, all these basic terms are explained in these videos one by one in detail. So, if you go through these videos, you will understand a lot about Forex. Point number four, what are trading styles? There is scalping, there is day trading, there is swing trading, there is position trading. You need to understand your personality and get into a particular style of trading. That is very, very important. You cannot be hopping styles because that is going to create confusion in your trading. Choose a trading style depending on your personality. As I said, there are multiple trading styles, but you have a different personality. Say, example, you're working, then you cannot be doing intraday and scalping. You need to go for swing trading and position trading. If you have a lot of funds and your goal is to become a full time trader, then you can think about getting into scalping and intraday trading. Now, a mindset required for intraday and scalping is totally different, and the mindset required for swing trading and position trading is absolutely different. So, you need to understand your personality before you get into the style of trading. Point number six, trading sessions. Very, very important because where you are living on this globe plays an important role. For example, if you are in India and in the evening, it's around 6 o'clock, you become free, then the best currency pair will be Euro and USD to trade because those currency pairs are active. Now, if you are in Europe, then you can go for European currencies and US currencies. If you're living in Australia, then you can go for Australian currencies and US currency, or JPY currency and US currency. So, depending on which zone you're living in and what time you're free, you have to choose your currency pair. And what is important is that currency pair has to be active in that particular time zone. That way you will see movements while you are trading. Point number 7, learn technical analysis. You need to understand every aspects of technical analysis, like different kind of charts. What is a trend? What is a support resistance? What is an oscillator? What is a candlestick pattern? What is a chart pattern? You need to understand all these things and figure out how you're going to trade. When it comes to technical analysis and viewing your chart, having less indicators on your chart is better. That means less is more. Yeah, clouding your charts with a lot of indicators is not going to help you. You need to choose 2 or 3 indicators and make sure that you understand these indicators well. Do not cloud your charts with a lot of indicators because that will only create analysis paralysis. Point number 9, create your own trading strategy. You need to study a lot of trading strategies, like a pullback trading strategy, a breakout trading strategy, a support resistance trading strategy, a divergence trading strategy. You need to study a lot of trading strategies and then figure out which is best for you, which you understand the best, and then choose a good trading strategy that fits your personality and your timing. Point number 10, once you have understood the fundamentals and technicals, then come choosing a good broker. You need to understand a good broker is the one who is making your trading easy and not difficult. So, a trader who will help you in depositing money, giving the money on time, opening an account properly, all the information is clear, the statements are clear. Whenever you have a problem, there is a customer service person available, probably at a chatbot, but still somebody is available to answer your query. All these things need to be checked. But most of all is the withdrawal and deposit process. You also abide with the rules and regulations of the country that you're staying in. So do not break any rules and regulations also. That's very, very important. And go for brokers who are very, very good, who have spent a lot of years in this industry so that you are sure that your money is safe. Point number 11, there are different kind of trading platforms like MT4, MT5, C Trader, Ninja Trader, TradingView, and many more. So you need to make sure that which trading platform you are comfortable with and trade in those trading platforms. Try all before you finalize one. But once you finalize, stick to that and become an expert in that. Point number 12, trade in a demo account. Yes, I understand that trading in a live account, there is a lot of psychological and emotional attachment. But before getting into a real account, practice. It is not only the trading strategy, but also getting used to the platform. If you're not getting used to the platform and you start trading with your real money and you do some silly mistake, then who will be responsible for it? So it is better you start trading in a demo account first, get used to the platform, get used to all the keys in the platform, all the shortcuts in the platform. And once you think that you're ready, not only with your strategy, but also with the platform, you're comfortable with the platform, then move ahead into a real trading account. Point number 13, while you're practicing on the demo, you have finalized the strategy and you're using that strategy. Then if some tweaking is needed, this is the time when you should tweak your strategy. Yeah, if there are some minor changes here and there, then do it while you're trading in your demo account. Don't wait till you reach a real account, get into some losses, and then you realize, oh, I had to do these tweaks in my strategy. Do it while you're trading in your demo account. Follow strict risk management rules. Now, when I say risk management, even in the demo account, you have to follow the strict risk management system. Why? Because you're getting used to a system. Do not invest more than 2% in any trade. You start with 0.25, 0.50% in each trade. Get used to it because you have to get used to watching losses and profits. You need to psychologically adapt to it. And if you do not have a good risk management in place, however good your strategy is, there are chances that you can blow up your account. There are times when every strategy fails and there is a series of stop losses. So you need to understand that if you have good risk management in place, you will always survive such periods in the markets. Point number 15, learn to lose well means there will be stop losses. But you need to understand the stop losses should be as per your strategy. Do not get into stop losses, by revenge trading or trying to regain all your losses in one trade and putting a big lot. You can put big lots, but it should be as per a strategy. Now, if you have already infused 2% and then you try to increase your lot size, that's going to be dangerous, right? So if you really want to increase your lot size as you have a couple of stop losses, then you have to start very small. Start with 0.10, then go to 0.15, then you go to 0.25, then it's okay. But if you start with 2% and 3%, and then if you plan to increase it, very soon you will have no equity to trade. So you need to learn to lose well, plan your losses. Probably you might not be able to plan your profits, but you can learn to plan your losses. That's very, very important. 16th point, risk to reward. Now, people say that you should have a high risk to reward ratio. Not necessary. If you have a strategy where your reward is going to be very, very high, then your risk to reward ratio will be different. And if your win ratio is going to be like just 1 is to 1.5, then your risk to reward is going to be different. So your win ratios and your risk to reward ratios go hand in hand. So you need to understand if your win ratio is more, your risk to reward can be small. If your win ratio is less, then your risk to reward has to be big. That is when you will make sure that you recover all your losses. Okay, so very, very important point, risk to reward and win ratio. Point number 17, stop losses. Stop losses is a very important part of risk management. But a lot of people say that you should have very, very tight stop loss. I say that you should make sure you put your stop loss as you can see in the charts. Sometimes you might have to keep 20 pips, sometimes you might have to keep 50 pips. Then the infusion has to be lesser if your stop loss is far. The infusion can be higher when your stop loss is less. But it should not be basis your pips. It should be basis your chart. If you're in a buy, your stop loss should be below a support zone. If you're in a sell, your stop loss should be above a resistance zone. Now that pip can differ. So you have to use good platforms where you know how to set your stop losses. Very, very important. Point number 18, before you get into live trading, learn to become profitable in your demo account. Because if you can't be profitable in your demo account, there is no way you can be profitable in your real account. First, practice for minimum 6 months in a demo account, get comfortable, get used to winning, and then go for a live account. Point number 19, while you're trading the demo account, do all trial and testing with all the systems of the platform. Very, very important. You have to get used to the platform so well that even in your dreams, you will not do any mistake in that particular platform. Because sometimes very, very silly mistakes cause traders a huge loss. So practice as much as you can in your demo account with all the features available in the platform. Point number 20. Only after all these steps are taken, open a live trading account. Now, when you open a live trading account, do not infuse huge funds. Start with very, very small and gradually increase because you have to get used to seeing the drawdown. You have to get used to seeing the profits. If you immediately increase the fund size and once you see a big drawdown, you will be tensed. So gradually learn and let your system get adapted to seeing drawdowns. And that's when you will become a successful trader. Point number 21. Once you've done all these steps, every single quarter if you're winning, or every single 6 months you're winning, or every year if you're winning, keep on increasing your funds in your trading account. Not on day one, not on week one, not on month one, at least 3 months minimum. Now, friends, if you've reached so far, I'm sure that you're really interested in trading the forex and you have gone through every single step I have explained. That's really, really great. Now, in forex, you have to continuously keep learning. I do the same, and I've been doing the same for the last 15 years. So you can follow me because I keep understanding what is happening in the markets and I keep updating through my LinkedIn and through my videos. So if you follow me, you will surely see the updates in my videos. Friends, I have also written a book, Traders You Can Win, but First Learn to Lose. This book is focused towards forex and technical analysis. So if you're interested, the book is available in Amazon in Kindle and the link is available in the description. So friends, I hope that this video has made it clear that how you should start your forex journey step by step. For every single step, I have created a detailed video and I have put the link in the description. So click on the link and gradually go through each and every video. And friends, if you really want to make it big in the stock markets, in the forex market, you need to have a lot of patience. You need to practice and you need to be persistent in the market. Manage your risk well because every single trade is a risk. So if you don't manage your risk well, you will be blown out. And finally, friends, if you love the way I'm creating these videos, please like and share these videos. So like you, there might be many others who would like to learn trading the right way. All these videos which I've created out of my own experience will help every single person who is viewing these videos to become a better trader. And friends, if you're still not subscribed to my channel, kindly subscribe to my channel and ring the bell icon because every time I see a new subscriber, I feel motivated to create more such videos. And friends, I keep saying this in every single video. Keep learning, keep growing, keep getting better every single day. Thank you. Namaskar.